The first rule in investment is don't lose. And the second rule in investment is don't forget the first rule, and that's all the rules there are. I mean, if you buy things for far below what they're worth, and you buy a group of them, you basically don't lose money.
How does a young boy delivering newspapers in the quiet city of Omaha, Nebraska, grow up to become one of the wealthiest individuals on planet Earth? The answer is not just luck. It's a unique blend of financial acumen, simple living, and a voracious appetite for knowledge. In today's expedition through the life of Warren Buffett, we unveil the layers of grit, intelligence, and simplicity that forged one of the most successful investors of all time. From his humble beginnings to the billion-dollar investment empire he commands, Berkshire Hathaway, you're about to discover how the Oracle of Omaha, with a starting capital of mere thousands, snowballed it into hundreds of billions. By the end of this video, not only will you gain insight into Buffett's financial wizardry, but also the life principles that can propel anyone towards a path of success and fulfillment. Early life and education. Warren Buffett's journey is nothing short of a riveting narrative of how a young boy, enveloped in the world of numbers and cents from a tender age, set forth on a path that would not only lead him to immense wealth, but also earmark him as one of the most influential investors of all time. Born in Omaha, Nebraska in 1930, Warren displayed a financial acumen far beyond his years, a trait that was clearly evident from his childhood endeavors. Young Warren was not just ambitious. He had a crystal-clear vision. He wanted to be wealthy. This aspiration was not cloaked in secrecy. It was a fervent desire that propelled him to dive into the world of business and investing at a phase of life when most are navigating through the whims of adolescence. His venture into earning money began with delivering newspapers, a humble job that he executed with a business mind. By the age of 15, Warren had already amassed $2,000, a sum garnered through his paper route and a handful of other small ventures. It was not just about the money. It was about the quest to explore the realm of business and understand the dynamics that turned cents into dollars, dollars into hundreds, and hundreds into thousands. But where did this early knack for numbers evolve from? The answer traces back to his father, Howard Buffett, a stockbroker, and eventually a four-term congressman. The environment in which Warren was nurtured played a pivotal role in molding his financial intellect. He was not just content with the rudimentary education system. He sought more, delving into books that elucidated the world of investment and finance. One such book was 1,000 Ways to Make $1,000, which piqued his interest and set him on a path of financial exploration. Warren's educational journey wasn't typical. It was characterized by an insatiable thirst for knowledge. He enrolled at the University of Pennsylvania at the age of 16, later transferring to the University of Nebraska-Lincoln, from which he graduated at the age of 20 with a degree in business administration. His quest for greater understanding led him to Columbia Business School, where he received mentoring from renowned investor Benjamin Graham, whose teachings had a significant impact on Warren's investment philosophy. The young boy who once roamed the streets of Omaha delivering newspapers now roved through the realms of finance and investment, laying the cornerstone for a legacy that would reverberate through the annals of financial history. The snowball effect. The imagery of a snowball steadily rolling down a hill, gathering more snow and momentum with every inch it moves, paints an apt metaphor for Warren Buffett's investment odyssey. Each decision he made and every investment he plunged into seemed to accumulate more wealth and wisdom, propelling him closer to the zenith of financial mastery. The cornerstone of this snowball effect undoubtedly lies in his acquisition of Berkshire Hathaway, a move that burgeoned into a financial powerhouse, engendering the growth of Buffett's fortune manifold. It all began modestly. In the early stages of his career, Buffett initiated a series of investment partnerships, demonstrating his extraordinary capability to spot undervalued companies with robust fundamentals. These small yet strategic accumulations were the nascent snowflakes that later snowballed into a colossal fortune. However, the real momentum picked up with the acquisition of Berkshire Hathaway, a struggling textile company, in the 1960s. The story behind this acquisition isn't one of mere financial opportunism, but is laced with a tinge of personal vendetta. When the then owner of Berkshire Hathaway slighted Buffett by reducing the buyback price of Buffett shares by 1/8 of a point, Buffett, feeling slighted, decided to buy the company and eventually let go of the owner. It wasn't the most auspicious start to what would become his most significant venture, but it unveiled Buffett's resolve and tenacity. Buffett's initial intention wasn't to hold on to Berkshire Hathaway for long. However, as fate would have it, this acquisition turned out to be the conduit through which he channeled his investment prowess. Buffett transitioned Berkshire Hathaway from a dwindling textile firm to a conglomerate holding behemoth, acquiring stakes in a myriad of companies across sectors. His acumen to identify businesses with intrinsic value and potential for long-term growth was unparalleled. Some of the hallmark investments that burgeoned under the Berkshire Hathaway umbrella include stakes in Coca-Cola, American Express, and Gillette. His investment in Coca-Cola, in particular, underscored his philosophy of investing in what you know and understand, famously termed staying within one's circle of competence. The sage decision to invest in Coca-Cola during the 1987 market downturn showcased his knack for discerning enduring value, even amidst market tempests. Through Berkshire Hathaway, Buffett could invest in companies with sterling balance sheets, competent management, and a sustainable competitive advantage. With every acquisition and strategic investment, the wealth of Berkshire Hathaway, and by extension, Warren Buffett's, multiplied. Buffett's decision-making matrix, often encapsulated in his yearly letters to shareholders, illustrated a blend of patience, analysis, and a long-term vision. He was never swayed by the short-term market frenzies. His eyes were set on the long-term potential, a trait that significantly contributed to the snowballing effect of his wealth. As the years rolled by, the snowball only grew larger, with Berkshire Hathaway's market capitalization soaring into the hundreds of billions, making Warren Buffett synonymous with astute, value-driven investing. Each decision, each investment, mirrored the essence of a snowball effect, illustrating how meticulous, informed choices could lead to an avalanche of financial success, marking the indelible legacy of Warren Buffett in the annals of investment history. The philosophy of value investing. At the core of Warren Buffett's storied journey lies a principle that seems deceptively simple yet profoundly impactful: value investing. This tenet, which became the bedrock of Buffett's investment philosophy, focuses on identifying and investing in securities perceived to be undervalued by the market. The crux of this ideology is to buy stocks for less than their intrinsic value, which is the actual worth of a company as opposed to its current market price, by analyzing its fundamentals. Buffett's initiation into value investing came under the aegis of Benjamin Graham, the pioneer of value investing, at Columbia Business School. Under Graham's mentorship, Buffett imbibed the principles of evaluating a stock based on thorough financial analysis, focusing on the intrinsic value and seeking a margin of safety. This margin of safety is the difference between the intrinsic value of a company and the price at which its stock is available, providing a cushion against unforeseen adversities. Buffett didn't just adopt Graham's teachings, but refined and evolved them into what many consider an art form. He melded Graham's financial prudence with a qualitative evaluation of a company's management, long-term prospects, and competitive positioning. Buffett's foray into value investing wasn't merely confined to cold, hard numbers. It transcended into an appreciation of good business models and competent management, a trait that set him apart in the investment arena. Warren Buffett's application of value investing principles was discernible in many of his successful ventures. His investments in companies like Coca-Cola, American Express, and Apple exemplify the tenets of value investing. He sought businesses that were undervalued but possessed strong fundamentals, credible management, and a clear path to long-term profitability. Buffett's knack for identifying such gems amid a stock market often swayed by sentiment and speculation proved instrumental in amassing his fortune. Moreover, Buffett's long-term investment horizon aligns seamlessly with value investing principles. He often espoused the view of holding stocks indefinitely, essentially investing in businesses he believed would continue to create value. This buy-and-hold strategy allowed the investments to grow, benefiting from the compounding effect over the years. His sage advice to be fearful when others are greedy and greedy when others are fearful succinctly encapsulates his value investing ethos. When the market was overrun by pessimism, Buffett's value investing lens helped him see the undervalued assets, and he seized the opportunity, often reaping handsome rewards as the market corrected over time. By steadfastly adhering to the principles of value investing, Buffett not only amassed a fortune but also etched an indelible mark in the investment community. His approach demystified investing for many and illustrated that with diligent analysis, patience, and a long-term vision, value investing could indeed unlock exponential wealth. Buffett's narrative is a vivid testament to how the disciplined practice of value investing, melded with an acute understanding of business fundamentals and an indomitable spirit, can lead to a journey from modest beginnings to becoming a beacon of investment wisdom. Learning from failures. In the narrative of Warren Buffett's illustrious career, one might be tempted to believe that success followed him like a shadow. However, like every seasoned investor, Buffett too navigated through the murky waters of failure. His journey elucidates that failure isn't a pitfall, but a stepping stone to greater understanding and ultimate success. One of Buffett's notable missteps was his investment in Dexter Shoe Company. In 1993, he exchanged Berkshire Hathaway shares worth $433 million for the company, which eventually plummeted to nothing as cheap imports overshadowed local production. Buffett candidly acknowledged this mistake in his letters to shareholders, calling it a blunder that cost Berkshire billions as the shares given up continued to appreciate in value. This episode wasn't merely a financial mishap. It was a poignant lesson in the importance of understanding industry dynamics and the competitive landscape, and it demonstrated the high cost of ignoring these factors. Another notable miscalculation was Buffett's delay in investing in tech companies. His traditional stance kept him away from technology stocks during the dot-com bubble, a decision that seemed wise when the bubble burst. However, as tech firms like Google and Amazon matured and showed robust business models and earnings, his delay in acknowledging the tech sector's potential became evident. It wasn't until much later that Buffett ventured into tech stocks, with significant investments in Apple and Amazon. This delay taught Buffett and many who follow his strategies a lesson in adaptability and the necessity to evolve with changing market dynamics. Buffett's dealings with airlines also served as a learning curve. Initially, in the 90s, he invested in US Air and deemed it a mistake soon after due to the airline industry's volatility. Yet, decades later, he returned to invest in airlines, only to sell them during the early days of the pandemic at a loss. These experiences highlighted the intricacies and risks inherent in certain sectors, imparting a lesson in cautious investment and thorough analysis. Here's an intriguing tidbit. Warren Buffett devours 5 to 6 hours a day just for reading. It's through continuous learning that he has honed his investment acumen over the decades. As you step away from this video, what new realms of knowledge are you inspired to explore? Share your thoughts below, and let's continue to learn from the sagacious journey of one of the world's most adept investors. Your quest for knowledge may just unlock the doors to your own snowball of success. As we conclude, we invite you to embark on your voyage of discovery, to prioritize substance over superficiality, and to harbor a keen eye for value. Who knows, the gateway to your next grand investment might just be awaiting your astute discernment. In the realm of investments, as in life, the pursuit of knowledge and value could indeed unfurl paths to untold riches.